Have you ever looked at an investment opportunity, whether that's a private fund, a syndication, a debt deal, or whatever it is, and thought, this thing looks good. I've done a little bit of my research, but I don't feel confident in wiring the money. Is this the right deal? Have I done enough vetting? And I will tell you that hesitation that you feel isn't just fear. It stems from a core problem, which is a lack of deal flow. Because when you've only seen 2 or 3 deals all year, it's impossible to know what good even looks like. And that is the nagging feeling that you feel in the back of your head. So you end up second guessing every investment decision because you don't really have enough context or comparison points to really understand, is this where you should be deploying, $50, $100, $200,000? But when you start seeing deals consistently, and I mean dozens or hundreds of them, your confidence skyrockets and you stop feeling like you're guessing and you start to feel like you're a real investor. And today I'm going to show you exactly how to build that kind of deal flow, which is the same process that I've used working for and deploying $150 million when I worked at Techstars as a venture capitalist. And also the same process I used when deploying and building my co-living investment portfolio that's now 94 units in Atlanta. And now also the same process that I use in my passive investing portfolio. So, hey everyone, my name is Pascal Wagne. I'm the host of the Passive Income Playbook, part of the Best Ever CRE show. And if you don't know me, I am a former venture capitalist who managed and deployed over $150 million at Techstars, one of the most active venture capital firms in the world. And since then, I've personally invested over $3 million across 23 private equity deals, from self-storage to multifamily to oil and gas and private credit. And those investments now generate me over $100,000 a year in passive income for my family. I think this year for 2025, we're on target for 150 grand. I've written off over $500,000 worth of income on my taxes from these. And I've also coached 21 wealthy investors one-on-one, helping them build personalized plans to invest, find, vet, and invest in these private equity deals so they can either, grow their money outside of the stock market, they can reduce their taxable income, or they can, grow their cash flow to 6 figures so that they can, at least have work be optional. So I have seen firsthand what separates confident investors from the anxious ones. And I can tell you that your confidence as an investor comes directly from your deal flow. So with that said, before we dive in, if you are serious about becoming a better LP, mark your calendar now for the Best Ever Conference happening February 18th through the 20th. Next year, 2026, in Salt Lake City. I will be there teaching an LP-focused workshop, and I also taught one last year. This is one of the top events in the country for learning from different operators in the commercial real estate space, connecting with other high net worth investors, and discovering new private equity strategies. I think this year is going to be their 10th year, so it's going to be I think it's going to be a blowout in comparison to the other ones. Tickets are just $695 right now, but as an incentive, the tickets keep going up as we get closer to the event, and I've seen them hit over $1,000. I think even over $1,300 in past years. So if you are interested in going, I highly recommend checking that out now. So go grab your ticket before they bump up the price at besteverconference.com, and then use the code podcast10 at checkout for 10% off. So that's podcast with the number 10. And, I'd love to meet you there and get to know you in person. With that said, let's dive back into the problem. So most people say, I just don't know where to find good deals, or how do I get deal flow? And what they're really saying is, part one, I don't know how to do it, but part two, I'm not doing the work of finding deals. And because deal flow, that's because deal flow isn't luck, it's built, right? Like, you have to build deal flow. You have to have a system for finding deals. And if you don't have a system for consistently finding and filtering deals and seeing many of them over time, you will always and continually feel stuck, and you will be second guessing yourself, hesitating, and waiting for an opportunity. And when one comes into your inbox, you're going to look at it and you're going to be interested, but you're not going to feel confident enough to pull the trigger, because you frankly just haven't seen enough deals in order to really know this is a good one. And that's why, I kind of want to walk through these three different examples from my own life and how I've solved this problem, starting with Techstars, then going through my co-living real estate portfolio, and then now passive investing. Because I think once you see and hear how the pros do this consistently, I'm hoping that it shifts your mindset, so that you take this a little bit more seriously, you solve this problem and never have this problem again. This is really a mindset episode is how I would frame this. So let's start with Techstars. So let me give you a little bit of a frame. So when I joined Techstars back in 2019, I had previously sold my last startup venture called Walkthrough. It was we did virtual reality and photography in real estate, and we grew to almost $1 million in revenue. We were in 5 or 6 different markets, had a team of 55, and we were growing pretty quickly. And once we realized that it was not going to be a $100 million company, a venture-backed real company, I decided to sell that to a national photography firm, and I joined Techstars. Or I said, "Hey, Techstars, I would love to learn how to be a professional investor." And they had previously invested in my company, and so we had a good working relationship, and so that's how I got the opportunity. And specifically, that opportunity was the portfolio and fund manager for their follow-on fund. So let's set a little bit of context. Techstars is a global accelerator. They invest in hundreds of companies. I think at this point, maybe 200 or 300 a year. And they'll invest $100K into a company. That company will come into the office for 3 months. They'll get coached and try to make as much progress in their business as we can. And then after they go through the program, the idea is that, within, I think the stat was like within 9 months, 70% of all Techstars companies raise at least $1 million of capital. And my job, specifically at Techstars, was to figure out, of all of those companies that we invested in, which ones were worth putting extra money into from this new $150 million fund, this follow-on fund that Techstars had raised. And so the thesis of this follow-on fund that Techstars went out to Texas Firefighter Association and pension funds, and they'd raised 10 to $50 million checks from these major institutions, and they said, "Look, we're going to invest in the top performing Techstars portfolio companies, and basically like pick the winners to keep doubling down on." And so, of that, we knew all of the companies that were in the ecosystem, but we didn't understand who was actively raising capital. And so, very hard as an investor, as the person who's trying to deploy that $150 million into these portfolio companies, trying to figure out, okay, who's actually even raising a round of capital that we so we could evaluate that deal and then decide to put money in it. And so that was my problem to fix. And so to give you a little bit of background, or to pull you into that seat, what that looked like is, there were, I think, 75 different accelerator programs around the world, of which there would be 10 to 12 companies going through each accelerator at any given time. And so I went to those managing directors who were basically in charge of their 10 to 12 companies. And I would go to them and I would say, hey, anytime that you have a deal or one of your portfolio companies is raising, please let them know that all they need to do is fill out this Google form with some basics about their round, and they have a chance for us to stick, a couple $100,000 into their company. And so first problem was, how do you create the incentive to find out what deal flow even exists? And so slowly, these deals started going through this Google form. And the Google form had some basics. The basics were all centered around the filtering criteria that we created from the thesis that we had as the $150 million fund. So you're going to hear me talk a lot about thesis as it pertains to deal flow, because it's the only way that you can really make sure you're getting the right deals. But so what did we do? So we would ask them questions that would say, like, okay, how much capital? First, what's the name of your company? Who's the CEO? When did you open your fundraising round? How much capital are you planning on raising for this? How much of capital have you raised towards this round? Who is the largest check? What is that check size? And do you already have someone leading the round? And so why did we ask those questions? For me, it was really because our thesis and part of the filtering criteria that we had was, okay, we never wanted to be the largest check writer in a company. And so knowing how big the largest check was in their existing round was important. We wanted to know the total size of their round, because when we learned over time from looking at the thousands of startups that we already funded, that if a company was raising less than $750,000, that they wouldn't have enough money to reach their next milestone and raise their next round of capital after we put in money. And so, we would only fund deals that had at least, were raising at least $750,000. And so on and so forth, right? So what happened after that? So all of these deals, every week, I would have a Google spreadsheet where after someone filled out the form, the deal would populate into my Google spreadsheet. And from there was a yes/no decision tree. Okay, is this company raising more than 150? Is there someone raising more than $750,000? Yes or no? If the answer was yes, we'd move on to the next question. If the answer was no, they would automatically get spit out. Is there someone who's a larger check than our 150,000? Yes? Okay, let's keep looking at the deal. No? All right, this isn't a good fit for us. And so I think the big point here is that once you have a lot of these filters and criteria, they filter out a lot of the deal flow that comes your way, which requires you to fill more deals in the top of the funnel. And so I think that's where, it's important to draw on this. This is what every single professional investor is doing. So whether it's at a venture capital firm, or it's the oil and gas operator, or the self-storage operator, or the multifamily operator that you are thinking about investing in, they are all doing the same thing, or at least they should be. So for them, the criteria might be, hey, we only want to invest in multifamily apartments that are in primary markets, in major metropolitans. We only want to look at multifamily deals that are near a major highway. We only want to look at deals that are in the southeast region of the United States and that are away from flood zones. So every operator that you are investing with is doing this process, which is the same process that you should really be doing on the passive level. But we will get to that. That leads me to kind of my second story. So I've talked a little bit about every operator should be doing this kind of approach. I'm going to go into detail and talk a little bit about how I use this same deal flow approach for my own co-living portfolio. So if you're new here and you don't know much about me, I've been a real estate investor since I was 23. As of this recording, I'm 35 now. And I have purchased over 19 homes. And I have used this deal flow process the same way. So at first, when you start getting into real estate, you don't really know what you're looking for. And you might talk to an agent and their job is to send you a bunch of deals. And so at first, when I started and I started working with an agent, I would be sent all these different kinds of deals that were definitely not a good fit for what I was doing. And I think I want to put a pin in this right here, because what's important is when you start your deal flow process, if you're in this spot where you know you want to be passive investing, but you're not seeing many deals, and you're going on this path to start getting more deal flow, naturally what's going to happen is you're going to see a lot of deals that you think are a waste of time or you're not interested in or are not a good fit. And that is a normal part of this process. And what happens there is then you say, okay, what do I not like about these deals that are being sent to me? Okay, so in the co-living example, I would be sent homes that were really incredibly old. And I realized that I didn't want to deal with any copper or lead issues or just have really extensive maintenance on the homes that I was purchasing. And so I set a rule that I only wanted to look at homes that were built after 1960. And so after I added that filter, I told my agent, and all of a sudden, now I started getting a little bit better deal flow, or at least I wasn't seeing all the ones that weren't relevant to me. For my model, what I do is I buy single family homes and I rent them by the room. And so for me, I turn living rooms, dining rooms, dens, garages, all into extra bedrooms. And so what's important to me is that a home has a lot of square footage. And so I would have another criteria that each home would have at least 2,000 square feet. Another criteria or thing that I've learned over time about my demographic is many of the people who live in my homes that rent by the room, who can't afford to live and be in a studio apartment or have a year-long lease. Those people often don't have cars or ways to get to their job. And so what's important to them is being close to public transportation. And so after I learned that rule, I started to change how I thought about it. I said, okay, all of my homes now moving forward needed to be less than half a mile from a public bus stop. Then I would, I also realized that, okay, I wanted to earn at least a 15% cash on cash return for any deal that I invested in, so that there was, if I made a mistake anywhere, that there was a margin of safety. Okay, if I only earn 10%, that's fine. I'm still happy, right? And so I started adding in criteria around, okay, I only purchase homes where the purchase price is under $250,000, or where my renovation budget is less than $50,000, so that I wouldn't take on these massive renovation projects. And so, look, I think the key thing here is that once I created these criteria, I had my agent go through the very same process. When they found a deal, and they would put that into my spreadsheet, and it would very clearly, using conditional formatting in the Google Sheet, of saying, okay, this hit all of my criteria, highlight that row or that home in green. And if not, highlight it in red. And the point here is that it's not to say, okay, the thing spit out a yes, and I'm going to invest in that deal. No, the point is that it just helps weed out all of the deals to my top 10%, of which I would then spend a little bit more time going through it. I would then, look at that Zillow listing, look at all the photos. Does it look like the right layout? Okay, those things look good. Okay, now I'm actually going to spend some time traveling to the home, or I'm going to have someone on my team go to the home and inspect it. And so I'm trying to make sure that I'm only spending my resources, my time, on deals that actually make the most sense for what I'm looking for. And I think that is the key here. If you are not, if you don't have some sort of filtering criteria, and you are not trying to dump deals into the top of this funnel that filters all the deals out every month, you're really not investing. You're being lazy, and you have a deal come your way, and you think it looks good. Maybe it's from an operator you already know about, and so you decide, I don't have the time to go research, do a bunch of deal flow, and so I'm going to invest in this deal. And then LPs turn around, and in all the forums and the chat groups, or even people that come through become clients of mine in my coaching program, wonder, why did this deal go sideways? Or how could I, hindsight is 2020, how did I invest in this deal? And it's clearly because of the lack of effort put in on the front end. And so I want this to be a little bit jarring. It's so prevalent that I think that's why I'm creating a whole episode around this, right? Is that if you are going to invest $50,000 or $100,000, and you have not looked at 20 plus deals that match kind of what you're looking for, you're doing yourself a disservice, and you're throwing the years of work and effort that it took to earn that capital, and you're flushing it down the toilet. So, okay, I'm going to take a quick pause here, and I want to say that if you want to become a sharper investor, and you want to be in the room where you're learning about these things and the real deals are happening, again, I'm going to highlight that the Best Ever Conference is celebrating their 10th year this year, and so it's going to be bigger than ever. There's going to be keynotes from all different kind of top real estate operators. You get to meet them in person, shake their hand, pull them aside, talk to a conversation. I'll be doing a talk on the main stage with my buddy Christopher Nelson, who's also a big passive investor in the space, and I'm also going to be teaching that workshop. So I highly recommend that you go to thebesteverconference.com and use that code podcast10, podcast with the number 10, and you're going to get 10% off. That is where you're going to get all this information, really, really get that mindset, and make sure you don't have these issues moving forward. So that now, fast forward to today. I use that same process that I talked about both at Techstars and then in my co-living portfolio. I use that same process for my passive investing portfolio. And so, what are the things that generally I'm looking for? And how am I finding deal flow when it comes to my passive investing portfolio? So, first off, what's important is having a thesis. What is it that I am trying to accomplish with my passive investment? And in my eyes, there are really only three things that you can do. You can either grow your equity, i.e., you are trying to diversify or find more consistent ways of growing your wealth outside of the stock market. The second one is reducing your taxable income. So a lot of reasons why people love private equity and commercial real estate is because of the depreciation component, where you can take the depreciation from the deal and write off your passive income so that you're not taxed on it. Or you might invest in something like oil and gas so that you can write off your active income with investing in one of these deals. Or the third thing that you can really do if you're investing in private equity is to grow your cash flow. And to me, that's like, how do you make consistent monthly income so that you either can, you're not as stressed at work, you can decide to leave your work, you have some cushion if you get let go of your job, or maybe you're just trying to retire and you need to replace that active income with something passive. And those are the three core things that those are the three core reasons why people invest in these private equity deals. So first, I would just think about, what are you trying to do? For me, originally why I got into the space is so that I could continue to diversify my income. And like I said, we've now are on track to make over $150,000 a year in income from our private equity portfolio. And so with that lens in mind, I am really looking at all of these different debt and private credit funds, and I'm asking myself, okay, what are the differences between all of these? If I'm trying to go for cash flow, like, what should I be aware of? Okay, well, first, I need to know about their distribution frequency. Are they distributing monthly or quarterly? Are they what kind of minimum investment is required? Is it a $50,000 investment? Is it a $200,000 investment? There are private credit funds where it's $1 million or $5 million minimum to participate. How long have they been around? Is this fund around in the last 2 years? Have they, been around since 2020 and they've gone through the interest rate rise and drop? Or have they been around since 2010 and, they've been operating for more than a decade? Do they offer a preferred return? Do they have any leverage in their fund? How much leverage do they have today, and how much leverage are they allowed to have as, put in their PPM? Are they doing first position loans where, if anything goes sideways, they can take the asset back as collateral? Or is it in second position where it's a little bit riskier and you get higher rates? Is the income that I get from this debt or private credit fund taxed at 20% because it has a qualified business income deduction? Or is it taxed at ordinary income? So, if you live in California, is up to 50%. So does it have audited financials or not? So when you start to think about what is the goal, and then okay, what are all the differences between an investment that I could be investing in order to achieve that goal? You kind of need to think through that thesis. Okay, so let's say we've thought about this a little bit, and we've said, okay, we want to invest for cash flow, and we want to invest $100,000, and how do we start getting all of these deals? We have an idea that we want the cash flow to be monthly. Ideally, maybe they're audited financials. They're only funds that are in first position. And to yourself, you might say, "Oh, hey, Pascal, this is great. I have I have my thesis ideally, but I don't have any deal flow. And that's where kind of the work comes in, right? So if you are going to be deciding you're going to invest in this space, you need to build up this deal flow. And I'm going to tell you how I have built up mine. So for context, I have a deal flow database that has over 800 different opportunities in it. I have been building this deal flow database for the last 5 years. I think since 2019 is when I've started. And anytime I would hear about a deal, I would take the pitch deck and I would go through it and then start filling out my own kind of Google form with details about the deal. And, over time, I've figured out how to use AI. I plug in the pitch deck, put it into ChatGPT, and it spits out all the answers. And then I can plug that into my database, and it makes it much faster to go through all of these. But I am going anywhere from, deals I hear about in my network to passive investing forums. So that could be like the best ever CRE forum. That could be the Passive Pockets forum. That could be the 506 Investors Group. That could be the Long Angle group. Those are all groups that I'm a part of where I'm actively pulling deal flow every time that they post a new deal. When I lived in Boulder, Colorado, I pulled deals from the Boulder Investment Group. I joined different Facebook groups where people were posting their deals. When you think about it, all of these operators are all trying to raise capital and get their name or their opportunity out there. And so they have if you just go look on Facebook for these groups, they will show up investing in commercial real estate, passive investing. They are very easy to find. So that is generally how I started. Then, another source that I look at for deal flow is there are hundreds of crowdfunding platforms. Ever since the Jobs Act of 2013, where all companies were now allowed to publicly raise capital if they followed certain rules, all of these websites started springing up. So if you don't have any deal flow, I recommend going to Fundrise, Yield Street, Realty Mogul, CrowdStreet. There are tons of these different databases. A new one that's been put together is from Invest Clearly. Invest Clearly is a website where people go and leave reviews about operators that they've worked with, and it needs to be verified that you actually invested in the company. So you're actually reading real reviews from real people who've invested with those operators, and operators are posting their deal flow there. And so those are also a great source of deal flow. And if you're new, that's probably where I would start. That's probably the easiest. Also, whenever I'm listening to a podcast and you hear about an operator that has a certain style, I go to their website and I opt in to their newsletter to start learning about their niche. And that's the first place where they post all of their deals. And then I think one of my favorite routes that I have learned to find deal flow is advertising. So pick your favorite advertising platform of choice, whether that's Facebook, Instagram, LinkedIn. I don't do TikTok, but I'm sure they're on TikTok as well. And every time, at first I thought, oh, ads, I don't want to be sold something. Why would I, if they're advertising, that must be icky. Like, I don't want to invest in a deal like that. And then if you flip that frame around and you say every single operator needs to advertise and get attention and put their deal out there in order for investors to know about them and for people to invest, then you start to realize like, oh, I should probably be looking at all of these different deals. And then if you go back and you see, okay, all of the biggest investment firms in the world, or maybe even all the ones that you know about, whether that's DLP Capital, Rise 48, I'm blanking here, Beyond Multifamily, pick your favorite self-storage operator, DWG Capital Partners. These are all just ones I came across recently. All these people need to find more investors, and they are advertising on these platforms. So what's remarkable about this is that once you start clicking on an ad, all of a sudden, Facebook's algorithm realizes you are a person that is interested in these types of deals. So if I'm looking for a debt fund, as I was over the last 3 months, once I visited a few debt fund websites, lo and behold, I started to get retargeted for debt funds. And then every single ad I came across, I put in my phone number and email. And my feed started filling with so many advertisements from so many different companies. Within an hour, I had 20 different operators who did debt funds because Facebook noticed that I'm opting in, I'm a hot lead, I'm putting my information in. Oh, we should send Pascal a lot more advertisements like this so that he can opt in on there as well. So I will tell you that if you are struggling to find deal flow, and there is one thing that you take away from this podcast, and you are trying to get more deals in the niche that you're interested in, it is plugging in your information into multiple ads next time you're on social media, and I guarantee you that you will find more deal flow than you can than you have time to vet. So. And look, I understand that all of this takes an incredible amount of time. Like I said, I've built my own deal flow database that has over 800 deals in it. I update it every single week as I'm an investor just like you, and I'm investing based off of that deal flow database. All 23 deals that I have done have come from that deal flow database, and I have opened that up, and it is free for you if you are interested in skipping all of that work and just leveraging what my team does on a weekly basis. You just need to go to passiveinvestingstarterkit.com, and you can opt in and you can start looking at all of the deals that have been most recent over the last 6 weeks. And if you're interested in scheduling a call and talking through how to vet a deal, you can do that as well, and I'm happy to talk to you. But look, I think ultimately most people, know that they want to be a passive investor, and they don't lack the desire. They just lack the systems and the discipline in order to get a bunch of deals coming their way. And so, they're the ones that are waiting for the perfect deal to show up instead of building a pipeline that brings them 10 options every month. So if you've only looked at a few deals this year, you shouldn't be asking yourself, should I invest in this one? What you should be asking is, why don't I have more deals to compare this to? Because the investors who win aren't luckier. They've just built better deal flow. So, I think I want you to shortcut this process. Really, if you are struggling with deal flow, I highly recommend going to passiveinvestingstarterkit.com. Take a look at our deal flow. Start clicking on different ads. Go to these different forums. Start clicking on everything, and I guarantee you more deals will come your way. Deal flow is freedom, and the more quality opportunities that you see, the more confident you will become, because you know that the next great opportunity is just always around the corner. Thank you for listening to the Passive Income Playbook, part of the Best Ever CRE show. If you enjoyed today's episode, to hit subscribe and leave us a review. It helps us leave more investors just like you. And as you know, with me, every new episodes drop every Thursday. And I'm here to help you become a better LP investor. Again, this is Pascal. Thank you for tuning in, and I will hopefully see you at the Best Ever Conference in Salt Lake City in February, and at the very least, see you on the next episode on the Passive Income Playbook.